Welcome to Private Equity Profits. Clifford Locks is a certified board of director, a trusted confidant to CEOs, C-level exec, and high-potential employees to help them clarify goals, unlock their potential, and create actionable strategic plans. Seth Greene is the nation's foremost authority on growing your portfolio companies with direct response marketing. He is the founder of the direct response marketing firm Market Domination LLC, and he is an 8-time best-selling author who has been interviewed on NBC, CBS, Forbes Inc., CBS Money Watch, and many more. Cliff and Seth interview top players in the financial sector, focusing on private equity firms, venture capital companies, and family offices, discussing developments and trends shaping the industry. These experts will share with you how they've grown their businesses and increased profit, and how you can too. And now, here's your host, Cliff Locks.
Welcome, everybody, to another episode of the Private Equity Profits Podcast. I'm Cliff Locks, your host. Today, our guest is Pablo Garnica, who's the co-founder of ArexTech. He's the CFO, and he's in charge of the financial and product strategy areas. ArexTech is a Canadian Proptech backed by Techstars that operates internationally, looking to empower institutional real estate investors to make better investments using data that wouldn't otherwise capture. Prior to embarking on ventures, Pablo was working at Goldman Sachs in London in the investment management division as a cross-asset class investor and portfolio manager. He started his career as a strategy consultant at MonitorDeloitte in Spain, where he specialized in payments and financial institution, PMI, consulting, and implementation. Pablo, thank you so much for being here.
Thank you, Cliff. It's great to be here.
I appreciate it too. Tell me about your background and how you got started on the journey that brought you to where you are today.
Yeah, so you already kind of hit some of the highlights, but it's definitely been an unconventional one in terms that I've been very fortunate to travel and get exposure to great experience in projects, both personally and financially. In terms of my studies, I studied a double bachelor in law and business, which kind of really gave me structure. But while studying, I was really kind of trying out different things, mostly in the financial sector. I come from a family that has been closely related to the financial sector in Spain and internationally. So I was trying to find my place. There, I did everything from kind of project finance to kind of more investment banking, and ended up doing a bit of consulting for the bank. So kind of meta finance in that sense. First job after that was actually in strategy consulting for financial institutions in Spain.
So what specifically drew you to investing?
I had a bias in terms of my upbringing with my family being there. Looking back, and this is probably not the answer I would have given you 10 years ago, finance is really a catalyst for anything and everything in the world, right? You can't do much without investment, and investment as a means towards making things happen, be it fulfilling your kind of family financial goals to actually getting a project up and running and creating an impact somewhere around the world.
So your relationship with your family was very, very close.
Yeah, actually, one of the reasons why, and I've traveled all over since I was a kid. I mean, I was born in Mexico, lived in the US, then moved to Spain, Switzerland, the UK, Italy for a brief stint. Now, most recently, COVID permitting, Toronto. Most of that was because of my dad's job in finance. Excellent. So it was really kind of one of the constants in my life was kind of finance, just in the family, really influenced us.
So the value proposition, you spent quality time with your dad, and that had a positive influence on you, and the communications and the warmth that you guys shared together.
Yeah, absolutely. And to be honest, it took a while before we actually ever started talking finance or anything finance related. But again, when you travel with your family for this, you live in this whole ecosystem with all the expats and people in the sector.
You started your career as a strategy consultant at MonitorDeloitte in Spain. Tell us about that time there and what you learned at the beginning of your successful career that you carry with you today. I
was very fortunate, as I said, the timing of me kind of finishing university and coming into the job. It was interesting for two reasons. One, because I got the last section of the integration of the financial sector in Spain following the global financial crisis. And also because Deloitte was launching their Monitor brand in Spain in terms of the high-end strategy consulting, and we were setting that up at the same time. It was interesting both because it was seeing up close what it meant to set up a brand and a practice in Spain or just in any market, with these integrations of these smaller banks coming together or being absorbed by the larger banks, and seeing that process up close from the branch manager to the CFO. You could really realize and see what the inefficiencies were, and how many things were just being done because that was just the way it had always been done, right? And there was no better explanation for it. And that, I think at the moment, I didn't really realize it, but it did really kind of spark something where I was just thinking, we can probably do things a little better.
That vision of yours to be able to look at the analytics and see, and then look at the automation that's available today, and then use that data to enrich decision-making. And I want to salute you and your team. You figured it out. It's high value. I'm hearing good things. When you worked at Goldman Sachs in London, tell us about that time and what you learned.
Yeah, so that was, I'd say, the most significant period prior to what I'm doing now, just because it was also the longest one. And I think no one will be surprised to hear that the learning curve there is pretty steep, where I think I really developed quite a bit of range. Just because of the way they operated or the team operates, was an extremely successful team. It was one of the most successful teams in the London kind of division. And what we did was essentially, I did a lot of stuff from trading on portfolios to kind of calculating all the returns. Well, not really calculating, but kind of making sense of the returns and what had happened across asset classes. And I was kind of liaison both for the team internally within the bank, as well as for my client with whatever they needed to know, right? Mm-hmm. And so in terms of just daily managing myself, managing tight deadlines and kind of delivering on the spot, that was really steep learning curve, and really appreciate and enjoy that. I'd highlight the caliber of the people that I was working with, also kind of forced me to step it up. Mm-hmm. Extremely humble, and it was all about the work in a good way. In terms of just delivering the most value to our clients, both in the service that we were offering and in the returns. I think the main takeaway there was that, well, actually two things, which are kind of the same but seen differently, is one, that execution is everything. It doesn't matter if you have the best ideas, that if you don't execute, you haven't really done anything. And secondly, also that experience is everything, and experience is part of the execution, right? And you can be a great manager and make great investments for your client, but if you're not giving them a good experience as to what to expect from their investments and their portfolio and how they behave, it's not good for anyone involved.
That's a foundation. You think about that user experience that you built at this point. It's got to be easy. It's got to be seamless. It's got to be intuitive. And then, of course, there's some learning that takes place to really maximize the value of the platform. But you brought that knowledge forward as you continue to build out your platform. Nice job. What do you see as the foundation of sound investments?
I think the obvious answer here, and you kind of set it up for me, is data, right? Making sure that what you're basing your decisions on is actually reliable and good. I'd go a step further, and kind of putting my investment manager hat on here, is I'd say the foundation for any sound investment, the easy answer that you set up before is data, right? Having reliable data behind why you're making that decision. But I'd go even a step further and say that it's the clear setting of goals and objectives for that investment.
So the ability to benchmark and really understand what you're measuring against, be consistent with the data. Because as I see the implementation of more machine learning and AI, folks that are actually setting up, the data scientists, we really need somebody with your vertical expertise to be at the front of the conversation before we bring the data scientists in. So you really understand what the outcome, what are we really measuring, what are we looking for, what the KPIs are. A foundation that all companies have understood at this point. They think they can put a room full of very brilliant individuals, data scientists, without the vertical expertise and expect a high level of success. And it's not the way it works. You need to work with that expert on the front end, and then you bring in, the data scientist and the IT, and you continue to work collaboratively together.
Yeah. And one thing that we're seeing, and perhaps is different about us, is that a lot of times, especially in investment firms, data, crucial data that is neglected is your own data. As in the data that comes across only your table and your clients and your interactions. And that's, I guess, what's a bit differential about us, especially in the real estate world, where you have, especially now with IoT or the Internet of Things, you can generate and capture plethoras of data. And sometimes I'd say that the best investment decisions are not based on millions of data points, just one or two key data points that actually matter for what you're deciding. So I think in how the use of data is evolving, we've gone nuts in terms of trying to capture everything and aggregating it. And now we're really consolidating and bringing things back down to a point where it's just not accumulation, but it's actually useful.
Very good. See, that goes back to that vertical expertise. We can make intelligent decisions based on the data sets that we have, and then the benchmarking of others' data sets that are out there in the public domain, and then make some positive decisions. You became interested in real estate investing and started ArexTech to help real estate investors. Tell us about ArexTech's platform, the rich data and analytics that help your clients.
Yeah. So funnily enough, kind of real estate found me in the sense that I never really had a big interest in it. As a multi-asset class investor and in my interactions with my clients, as soon as someone has a liquidity event or something happens, guess what the go-to asset class is? It's real estate. And that was the one thing we didn't do directly back at Goldman. I kind of got myself thinking, well, we do all this other stuff, which is a lot more complicated. And you actually need education to be allowed to invest in it by a regulator. Why not? Why can't I just buy a building? And at least my interpretation of the answer is that there is no standardized kind of repeatable way of doing it from one transaction to another, which becomes extremely expensive. The information out there is, it's opaque on purpose. So you need all these intermediaries there as well. And so the reason for kind of going into this area is because just my logic behind that and my co-founder's logic behind that as well was it's where there's most room for disruption, or these are the guys that are further behind. And one thing that we've been seeing kind of informally, or at least from our perspective, is that fintech is 5 years ahead of PropTech. So it's a good KPI or indicator to see where it's going. And lo and behold, we're seeing now that where in the past few years, there's been a proliferation of a lot of PropTech companies popping up. Now we've started, or we're in the early stages of consolidation with more traditional incumbent players in the sector actually acquiring and merging all the PropTechs that came up to serve their needs and to try and survive and stay up to date.
So you're seeing the innovation that's taking place and the cutting edge technology to make informed decisions.
Yeah, with regards to our platform, what primary value proposition is that we allow you to capture especially data about your business. We're not market data providers, but we structure your data in a way that it makes sense in the context of market data, right? So your portfolio and everything, and you're not buying data for the sake of it. You can actually compare apples with apples. One of the values behind our product philosophy is that we are not going to create a process that you will be working for after we're leaving. We build processes that will work for you, right? That's the whole point of this, make you work smarter, not more.
That's a good philosophy. ArexTech is backed by Techstars. Tell us about Techstars.
So Techstars is one of the largest investors in early stage, and by early stage, I mean seed and pre-seed ventures globally. The year that we came in, they were making 500 investments that year in companies. Their philosophy is a very kind of healthy one of give first, where their goal is to make entrepreneurs and companies successful. They're similar, I'd say, so one of the competitors or other players that they're often compared to is Y Combinator. I'd say the difference that Techstars has versus Y Combinator is that they partner up with industry experts and companies. So in our case, in real estate, it was Colliers International in Canada, which is why we ended up moving over to Toronto and setting up the company in Canada. But they have I know in London, their fintech program partnered up with Barclays, and they have partners across the sector. They have stuff for space down to nutrition. They're all around, their industry specific, and their program and I think the true value there is the network that they have. Thousands of entrepreneurs, and everyone has stepped on a mine at some point. The network they have and how it's built technologically is very useful because everyone is accessible and everyone's willing to help.
It's a great organization, and it was a privilege to be part of their webinars and some of their events, and just look at the high quality content they put together. And they're enthusiastically want to support their entrepreneurs. I mean, they're more than just invested. They're providing the services almost like an accelerator, where resources are coming together to support those entrepreneurs to allow them to scale and grow and become, to figure it out, meaning there's probably an exit, build to sell. At some point, you'll make a decision what that looks like. So the consolidation is very interesting. I appreciate you bringing that up. And that's showing the industry is maturing and there's a need. And I think that's important. When you think about real estate space, is there a need for disruption? And what do you mean by that? And what do you think needs to change?
So this is a question that I'd say maybe is loaded in the sense that we've seen a lot of different reactions to this. So the first approach, which is kind of the incumbent, is if it ain't broke, don't fix it. Real estate has been making money for ages. People are successful. It works. Stuff happens. But when you compare it to, let's say, any other type of fund that invests in any other type of assets, the gap that is growing now at a lesser speed, because PropTech is kind of helping that, between the tools used when investing and managing real estate and investing and managing, say, a company or just random stocks, is very big. Things still happen on paper, even facts we see quite often, which is, I don't know if worrying, but it's definitely anecdotal. I'd say the need for disruption comes from the fact that there's just so much. It's not that things aren't happening well enough or in an effective way, is that it could happen so much better, and the experience itself is horrible. I mean, any transaction where on average globally, the cost of actually just making the transaction happen on average is 10% of the value of the asset, definitely has room for improvement. And that's the average. You have places where it's 30, 40%. So I'd say from the buyer's perspective, there's definitely room for improvement in terms of what it costs to transact in real estate. And then from a seller's perspective, or the professionals in it, it's just that they could escalate and grow a lot more, do a lot more with a lot less.
Think about the teams of team members that need to be in place to do one of those deals versus the automation you can bring forth and get a deal done with a lot less overhead. That leads me to this next question. What are the challenges and pitfalls associated with investing in real estate, and how do you overcome them?
Absolutely. It's a great question. And I don't know if I think about it or I suffer it every day. I'd say it's getting to the right people. Okay. And in the broader sense of the word, I think that people, and a lot of times when I say this, people think I'm talking about hiring people, and it's actually also about clients. I mean, there are companies who are really at the cutting edge of technology. We're not them just because we don't need to be. There's so much room to improve in real estate that with just a little, you can go a long way. But we need to finding the right clients and the right investors that believe that there's a better way of doing things and are willing to take that risk. Mm-hmm. I'd say that's the biggest challenge. If you break that challenge down, you can say, I don't know, depending on the day of the week, I'll tell you the challenges in articulating what the real problem is. The real challenges in making them see how this is a crucial part of, or should be a crucial part of, any ESG strategy for real estate investors or otherwise. One thing that we've been very, very lucky and we kind of struck a chord there was with the younger people in the sector, the up and comers. In my case, we are quite young for any average kind of startup. My co-founder, actually, I met him while he was my intern in Goldman Sachs, right? I think mentorship, something that is tremendously needed now. And you're seeing more and more platforms where people can mentor people across the globe and everything. Putting stock in the younger generations really, I think, is something that we found is a great response for finding the right people. And they can do more than we think.
That's a nice way to bring up. When you look at mentoring, it's really about an educational program. And both the mentee and the mentor both learn and grow together. And I think that's the strength where the value proposition. So as you look to our listeners on hiring interns during the summer or during the holidays, the idea is it should be an educational experience for that young person to come in and really assess. And then you get to also look at their skill set to see, staying in touch with them over their years as they finish up in their education. Would you like them to come back because they have the right attitude, the right education, they're bright, they're enthusiastic, and they really want to learn more about the field that you're currently operating in? I think when you look at the entrepreneurs, we get it. It's always about the team and thriving and listening to the customer and really trying to remove some of the obstacles and friction in a process which delivers high value for the clients. Not all the clients will see the value right off the bat, but as they go in deeper and you get more opportunities to speak with them, they start to learn more about the platform and the data and, sort of the storytelling that can be put into play. This is how you can use the data to enhance or reduce the time it takes to do a deal. I think they get it at that point. It's not hard. I've had conversations with Cushman Wakefield, the individual head of IT, multiple times. And we're looking at an individual that's brilliant, passionate, really understands what IT can do for such a large organization. And it's going to be entrepreneurs that are going to bring in the breakthroughs to help that organization. They know they're not going to develop it from within. It's going to be young people like yourself and your co-founder that brings in these tool sets that really enhances the performance that they can bring. Do you see any trends in real estate investing sphere? And is there any way to take advantage of them?
Although we focus more on how people invest rather than what they invest in, I think there are some macro trends that are undeniable, especially with the way that the world's behavior has changed of late. We're seeing a lot of crowding in the industrial space, especially that last mile area, depending on where you are, because again, real estate is extremely local. The impact, like you're really depending on what the starting point was for each region or wherever you are, that's really going to determine how crowded it is, what the pressure on pricing and yields that's been. So I'm kind of reluctant to say anything other than sort of the macro trends where real estate essentially is a medium, right? So you have to see what's happening in the world and how that translates into real estate. So right now with flexible working conditions or agreements with new employees and people who have kind of gotten rid of their offices or downsized, you'll see, and so for example, I spend quite a bit of time in London, you'll see a radical change in the value of different areas where now quality of the actual house becoming increasingly important. Location is still the main factor, residentially speaking, but you're seeing some shifts where a lot of people are making quite a bit of money just being smart about it and kind of conditioning buildings for mixed use in urban areas. And again, right now, for example, anything kind of tertiary sector, hotels, services and everything, they're getting a break after a tough couple of years. Mm. And again, depending where you are. In Europe, there have been some pretty strict measures and there has been a lot of movement. Other regions, there's been a bit less disruption.
That's very insightful because I'm looking at some of the office buildings we have in Manhattan. I'm in Long Island, so I'm close to New York City. We are going to need to repurpose some of the space at some point. The question comes up, will we allow the zoning and the building permits that are needed to do these conversions to take place? So it's a mixed use environment, even though originally it was all office space. You got some brilliant people in real estate. They're going to figure it out. Underperforming assets have a way of motivating people to make changes. What are the trends you see in general in the market currently or going forward? Any insights you have?
So, and I think this applies to alternative investments in general. And I started seeing this, I was investing up until 2018, 2019. Mm-hmm. I was already seeing people chasing alternative investments, looking for higher yields at a time where market was let's say, stunted somewhat compared to the previous years. And they were looking for higher yields in exchange for less liquidity, right? They were getting that liquidity premium. However, there's been a surge, and we have a contact with VCs, obviously, in our fundraising exercises. And the amount of capital that's out there looking for opportunities is ever growing. I was just reading the other day a survey where they were asking for 100p investors in terms of what their expectations was for 2022 in terms of deal activity. Just over 60% of them said that it was going to be up slightly or flat year on year. 2021 was already a year where, and you probably know this better than I do, where the volume of transactions was quite monumental, right? And just keeping that for 2 years straight would be quite unprecedented. I'd say one of the things that I'm hearing from, and again, I speak more directly with earlier stage investors, but also with some private equity ones, and they both say kind of the same thing, where there's an unprecedented supply of capital, but also challenges of crowding in into the asset classes, right? Especially depending on different sectors with more or less aggressiveness. Mm-hmm. Soon, I think it's going to be the upside for the investor. It's going to become a more efficient market, where the kind of the other side of the coin is kind of, well, you're going to see prices kind of being pushed up just out of people bidding.
I'm consistently hearing what you're saying at this point. There's a premium out there. In other words, the entrepreneurs are getting smarter, and the VCs are willing to wait a little longer for, increasing sales month over month. They're willing to pay the premium, for the book of business. And then, the idea with the entrepreneur, make sure you're making a marriage when you accept funds from an entity, and make sure you're both on the same page. But smart money means they come in and they actually bring resources in, and they want you to thrive. Yeah. They're not looking to manage a business.
And one thing that's happening as well is that before, with lesser inflation, it wasn't an issue not to be invested, right? Or to sit on capital for a bit more. Now, as we're seeing inflation kind of going up more than gradually, that urgency is kind of ramping up. And one of the things that I'm seeing as well is that a lot of investors are seeing equity, be it public or private, as a hedge for inflation, right? So I think that's just going to contribute more to this increasing pool of capital.
Well said. Inflation's playing a major role. I don't see it going away. I think we're going to see the assets, meaning real estate, is going to increase to stay hopefully ahead of inflation, but I'm not sure. My challenge is, on the commercial side, it's not an issue per se, but those that are trying to buy a home, a first-time home buyer, the house prices are getting to the point where it's becoming a little difficult to get the down payments and make those commitments. Mortgages are going, we're normally max 30 years. Some of them are starting to look at 40 years, just so you have an idea. Just thinking about, what that means on, trying to build equity in a property, and then at some point moving up. It's going to be interesting how this plays out on affordability. Yeah.
Yeah. And also where wages also haven't gone up significantly in a long time. But I think that gives for a longer conversation.
Yeah, I agree with you there. You have some background in private equity. What do you see in private equity today that investors should look out for?
One of the things that is becoming clearer to me, and again, I'm no expert, but just from my experience, is that private equity is very much aligned with sustainability and ESG goals for companies and also broader markets, right? Even if it's just for the long-term view that they have on sectors and companies and how they're focused on governance. Granted that technology underpins it all, and as the cost of computing power decreases and consumers demand more seamless technological experiences, every industry must assess how to adopt technology and stay relevant. And in many cases, and which is what we argue for real estate, it's not just for growth. In some cases, it's for survival, right? You have to stay up to date. It's our impression that private equity is remediating and can remediate. And this was mentioned, it was BlackRock's private outlook for this year. The private equity is a catalyst for ESG, and the focus, although the environment aspect is probably the more urgent and kind of catch-all one, we often forget about the S and the G. And the one thing that we're really seeing in private equity, in conversations with real estate private equity investors, is really also how they can use the S and the G to differentiate themselves from other managers and competitors.
That's positive. Those that are writing the checks have a mandate. So the limited partners that feeding the private equity, some of the larger endowments, they're coming in with a mandate and they're very verbal on what they expect from their investments. And I believe the private equity teams are listening.
And a big part of governance is data of your own business.
Right. Yeah. In other words, you got to prove it. There's some greenwashing that takes out there, which I don't accept. It's just wrong. The idea and the data, acquired. And you brought up something earlier, the IoT devices, things that are actually measuring within, and then the data is coming in and it's actually creating a dashboard and you're measuring against what you said the KPIs are. The rehabbing of buildings, making things, with the insulation and improving how we're going to generate electric. We're going to continue to do it on a mass level, or we're going to do it more on a microgrid basis. So we have opportunities at this point. I'm invested in a hydrogen company. The idea of I can use seawater without desalinization, and I can put a unit close to where that warehouse, that plant is, or in a residential environment, and you could co-locate that gas inside the normal natural gas. And at that point, you have a greener gas. Seawater is plentiful. It's probably the thing that's most plentiful on the planet. I'm not a fan of using drinking water to turn it into hydrogen. I'd rather use the effluent, that's sanitized. So again, on the ESG side. Pablo, is there anything I haven't touched on that you'd like to add or expand on?
I think we touched upon a lot of subjects that we could really go deeper on. I think it's a pretty well-rounded, like most of your podcasts, pretty well-rounded conversation.
I appreciate that. How can our listeners contact you? Are there any links you would like to share?
So I'll share a link to our website. Feel free to contact me via LinkedIn. You can see me under my name.
Share your URL.
Arex, so AREX.technology.
Thank you so much for your time, Pablo. You and your team have a bold vision and are taking steps to make it reality while helping to empower so many others. Thank you for sharing your vision, and we look forward to seeing your influence you have in the industry. Thank you to our listeners. I look forward to being back with you shortly for another episode of the Private Equity Profits Podcast. This show has been produced by Market Domination, LLC.